How long is this going to go on?
Well, let's hope not too long, because the Canadian dollar now at a 5-year low. Of course, the biggest export out of Canada. I think a U.S. dollar now buys you about $1.14. Now, anyway, let's go back to oil here. So we're below $80 for the first time in over 2 years. I think we're at 77, 78 across all of these contracts, I think over the next few months or so. Brent, which is the global benchmark, of course, is back below 85, 84.10. Last I checked, we get Brent up as well. I think because the reason I bring that up is because we're, again, very close to touching this 4-year low of about 83.25, which is, I think, the lowest since November, 2010. Now, the latest reason here, I guess, adding to the what's getting to be a longer and longer list here of reasons why investors are just dumping and getting out of oil, is, again, Saudi Arabia. So I think a few weeks back they cut their official prices to Asia. They've now cut their official prices to the North American market, to the U.S. market here. Yet again, it's, again, another move here that's being interpreted, at the very least, by the market that the big producer, Saudi, is perhaps more comfortable dealing with prices where they are and doing this just simply to regain market share. Of course, they have to contend with U.S. producers right now. So that's the short of it as far as the supply side is concerned. Now, we always also talk about demand. I think we were speaking about this yesterday, that simply, the world is not just needing much oil right now. You have the big consumers, India, China, for example, not growing as fast as they used to be. Let's listen to Mark Faber, author of course, the Gloom, Boom, and Doom report.
Maybe the decline in oil prices tells you that the global economy is not recovering as all the bullish analysts think, but actually is weakening. Yes, weakening. But some countries benefit from lower oil prices, particularly India.
And, of course, he says that with a little bit of a smirk there, of course. Now, just to add to this, the hedge funds have now cut their long positions on oil to the lowest in 17 months.
Well, let's talk about the supply again, because how much has shale really changed the landscape here?
Yeah, that's really changed the dynamic. If you talk about, I guess, pricing power of OPEC, which is responsible for 40% of global output, it certainly eroded that pricing power that they have, because simply the U.S., which is the biggest importer, obviously, of oil, isn't importing as much anymore. They're getting closer to energy independence. I mentioned Saudi, of course, cutting prices. You look at the crude imports, U.S. crude imports from Saudi Arabia, over the past, 4 or 5 years, we're looking at about, more or less, about 1 million. If you can get back to the previous chart that we just showed there, U.S. imports from Saudi Arabia, more or less at about 1 million, more or less, 1 million per day. That's actually now down to below 700,000 based on initial data. Yep, so here we go, 5 years. We're 2 million is basically the upper end of this chart. We're looking at 500,000. So you draw a line at where this average is, that's about 1 million. And look at where we are right now. That's about 600,000 a day. Now, the next chart, and over the U.S., the short of it is really, again, they're producing, I guess, they have the highest output of oil since at least 1983. Almost 9 million barrels every day. And all of this is happening as OPEC continues to ramp up production. I think we're now at about 31 million barrels a day.
And this is what is making a lot of African oil-producing nations very, very nervous about the state of their local economies, because the U.S.
They're highly dependent on oil.
Not
Nigeria, for example.
I think the U.S. Actually no longer importing oil from Nigeria anymore.
Yeah, I mean, that's also a big part, because when you build your economy around one industry, it's just two sides of the same coin, really. When things are good, you're literally sipping champagne next to your oil field. But again, you look at what's happening now, and it's for the lack of a better word, it's a price war. What's happening between the big oil producers, and I guess the next big one is the OPEC meeting, and end of this month, 23rd. Will they agree on production cuts?